Hi all, it's 3rd October 2021 today. I'm going to touch on the trading week ahead, covering from 4 October to 8 October 2021. It's a week of PMI, rate decisions, as well as unemployment rate. So what will sway this market? As always, do give a like if you like this video and do subscribe to the channel too so that you can be kept updated on various YouTube updates on stock analysis and broad market review and trading week analysis as well. So what's going to happen coming week? On Monday, we have the US factory orders. On Tuesday, we have the Tokyo CPI, Australia rate decision, Japan BOJ governors potentially talking, and UK Europe PMI data, as well as the US PMI data. As we know, US dollar has strengthened quite a bit in recent days, yet renminbi is holding relatively strong against 1 USD of around 6.45, strengthening in fact from 6.47 to 6.45. All these events are going to impact on rate decisions as well as the exchange rate and how it may potentially affect countries' GDP, exports, imports. So it's important to watch out on this. And naturally, when all this interlock and impact on various economies, this will impact on stock prices as well. On Wednesday, 6 October, there's also the New Zealand interest rate decision and US crude oil inventories and non-farm unemployment change. So a lot of things are happening. And on 7 October, there's like ECB monetary policy meetings account and US initial jobless claims. Needless to say, various central banks have their own rate decisions and they're going to announce like New Zealand, India, RBA. All these are going to have their own decisions and whether inflations are going to impact on their rate decision and they're going to hike the rates, and will this impact on Federal Reserve to be more aggressive in terms of rate hike, or will it not? It will eventually impact on the discount rate and affecting asset prices. The question to ask is when is Federal Reserve going to impact and affect and determine the interest rate decision change point? This will be the ultimate thinking point. So we know that WTI oil price recently is around $76. It's pretty high considering that at the low point of last year when COVID-19 struck, WTI has hit below 15 US dollar. And there's also worries about whether employment market will tighten so aggressively that unemployment rate will fall aggressively and then impact on Fed decisions. You will hear that I've been talking non-stop about Federal Reserve and what's their rate decision and asset tapering policy, because this is what it matters to the whole market. The truth is, when it really happen, how fast will it happen is what people really take note of. If the GDP can grow sustainably and even at a faster rate than rate decision and company earnings are growing more aggressively because of better economy, then the worries may be less. But we can't play too far ahead in trying to anticipate what's going to happen. Sometimes if you're trading or investing even, we have to stay agile in terms of a monitoring of what's the macro events happening and the fundamentals of the company, are they changing? So on 8 October, there's other things like India interest rate decision and US average hourly rate, building permits, non-farm payrolls, and unemployment rate. Like what I mentioned earlier, are businesses right now under inflationary wage pressures? Oh, this Bitcoin. Can Bitcoin hold above 48,000 US dollar? Recent days itself, Bitcoin has seen a low of around 29,000 USD, but through the last 1 to 2 months, it has climbed steadily above 40 USD, at one point above 51, 52 USD, before coming back down to around 41, 42 USD. At the current timing right now, Bitcoin price is around 48,000 USD. And Bitcoin ETH, at one point to the new millennials, they are perceived it as a hedge against the loss in dollar value because of the non-stop money printing, etc. But on the other hand, Bitcoin and ETH to the financial investors, speculators are perceiving it as a risk asset. As its price start to go out itself, it's also reflecting a aggressive mood of the market that, well, we are not going to take risk off the table. So risk sentiment monitoring is very critical to actually watch a Bitcoin and ETH price. Of course, there's also renowned commenter asking whether to buy the dip strategy in general, be the US markets or cryptocurrencies, whether does it hold because of the Federal Reserve at the critical crossroad right now. You see what I've done here? I've done in terms of the S&P futures, Dow futures, Nasdaq 100 futures, gold price and crude oil price. Here, what is shown them up on the recent Friday, and they are above my support levels for Dow, Nasdaq 100 and S&P. And for gold itself, whether can it cross 1800 USD again to move back on the uptrend will be a reflection and thought to think about whether is it a hedge against potential market crash, or is it more like, oh no, Fed is not going to uh do very aggressive rate hike, so let's continue to hold the gold as a substitute of the dollar currency. I do not anticipate oil price to be breaking out on top fiercely, but of course I don't bet on the WTI right now at this price point because I don't see a need to, because there's so many other interesting instruments like equities for me to long the market. So next week is the week of China 1 week holiday. What's important is I still remain cautiously optimistic as long as the US support levels for Dow, S&P and Nasdaq 100 are protected and they are not broken. Hong Kong equities are right now at critical support price level. For interested viewers, you can take a look at my video where I talk about the weekly recap of the Hong Kong markets. We still have to watch out for headwinds because the bears are always on the sideline trying to short sell the market, the US market and the Hong Kong market. China market is relatively resilient at the current price point. And for people who are trading, you still have to be very agile and abide by your stop loss because market can swing either way right now. But with my support level not being broken and supported, especially for Nasdaq 100, I think going to be on an aggressive selling position is a bit risky. I'm not advocating short selling for retail investors and traders. And lastly, while inflationary pressures are being acknowledged, it may not wise to chase the commodities futures long back because the wind can swing very fast in a way that it may just change the tide. So watch out for your risk. If you are trading, abide by your stop loss limit and quickly take a loss when you are wrong. This is a point that one had to learn over a certain time period. Thank you. As always, this should not be construed as any investment or trading advice. Thank you.